Hi there, Serial Trader here. Given today's sharp reversal from the attempted breakout, I think this warrants an update video. Okay, so yesterday, or I guess on my last video there, I think it was yesterday, I was working potentially that we had kind of an unusual ABC completed like this, where the C wave failed to make a new low below A for this larger wave 2, and that, okay, perhaps we're starting the next impulse wave up, which would potentially be a larger degree wave 3. Pretty bullish interpretation, but the failure to break down kind of encouraged that kind of thinking. I mean, there were so many attempts to get below this previous low here, that June 15th low. But given today's rejection of this attempt to break out, I think it warrants another look here. So this is what I'm kind of thinking. And let's call this our A. Let's call this our B. And then potentially looking still for that C wave down in a larger wave too. Now, it's not a zigzag, at least going off of SPX here. It'd be potentially a flat, a 3, 3, 5, 3 down for A, 3 up for B, to basically a double top, which is pretty classic in a flat. You basically have a double top, or if it's an expanded flat, you go even considerably above the previous high and then come down and go below the previous low in that C wave. But on SPX, you can't call it a zigzag. And let me just go on to the hourly chart here. Now, I've done my best to put on a few different degrees of labels here to try and make sense of this all. So it still looks like we ended our wave 5 of potentially larger wave 1 there on June 8th. From that peak, you have that initial 5-wave decline, which, you know, I don't see how you can count this anyway other than a 5-wave decline. It has a very impulsive look to it. Clearly a wave 3 in the middle there, and no overlap between 4 and 1, etc. So impulse, wave down, and 5 waves. Now, to make this a 3-3 and then looking for 5 down, I'd say you got 5 down for A of A. This was an unusual A, B, C up for B of A. And then this 1, 2, 3, 4, 5 truncated C of A down. So all of this is a ABC for A. So that's the initial 3-wave decline with a truncated C wave. So again, normally in a 3-wave decline, you'd be looking to take out that prior low, but truncations are possible. They're just not common. So 5, 3, 5, ABC down for this initial wave A of the larger flat wave 2. Then you got 5 waves up here in wave A of B, ABC down for B of B, and now final 5-wave pop up here that looks like it finished today in wave C of B. So you got 3 down for A, 3 up for B, and now if this is actually the right interpretation, and given how back and forth the market has been, it's difficult to have confidence right now, but just trying to apply the wave principle as best I know how, this looks like a pretty viable interpretation. Now that we have had this swift rejection, it has me leaning, you know, a little more bearish here, at least in the near term. So if this is correct, we should be trending down in impulsive fashion and looking to make a new low below that June 15th low. Okay, and you can see we just violated, so the June 8th high was 32.33.13 on SPX. We went as high today as 32.35.32, so we broke it by 2 points and then had a massive rejection, big sell-off, very abrupt actually, into the end of the day there. So it looks like a pretty bearish reversal. And if we are going to get a 5-wave down move for a larger C of 2, it should be aggressive. This C wave should be very sharp. It shouldn't, you know, meander around for too long. It should really get going. So we'll see if that plays out. Now, one thing I will point out on ES, so the S&P 500 futures, the E-mini S&P futures, this could still technically be considered a zigzag with an extremely deep B wave, because we didn't actually take out the prior high. The prior high here on ES was 32.31.25. Today we went as high as 32.26.25. So technically, you could just make the case for 5 down for A, ABC up, so 535, ABC up for B, and looking for another 5 waves down for C. So 535 zigzag is still a viable interpretation, given that we didn't take out that prior high on ES. So it depends which one you want to lean into more. Do you want to lean more into the futures chart, or do you want to lean more into the SPX cash chart? Either way, despite the nuances, both these interpretations are suggesting that we're going to have a leg down here before we actually get up here in that larger wave 3. Now, hey, something else could still be going on. I mean, this market's just been full of surprises. It's been difficult to get a handle on it. But currently, given today's rejection, this is my best take, and I felt it was worth sharing, since it's certainly a change from my tentatively bullish interpretation I made there yesterday, which I think is all but extinguished given today's swift rejection of the false breakout. Basically, got a double top. You got a false breakout, double top, bearish divergence as well. So we made a slightly higher high, at least here on SPX. RSI made a clearly lower high, so you had the bearish divergence there. Same here with the MACD, bearish divergence. So that certainly looks like a false breakout with the bearish divergence, and now a sell signal. So it doesn't look bullish at this point. If we'd broken above and kept going, that would have been a bullish breakout with follow through, perhaps a new trending wave, but that does not look like what we got going on here now. So yeah, futures chart, this could still easily be a 535 zigzag ABC. Cash chart, I'm thinking a more nuanced 335 flat or expanded flat, potentially with an unusual A wave, as I explained there on this shorter term hourly chart. Just trying to make sense of this very complex pattern here. I think this is a reasonable interpretation at this point. Now, if we just go to the Thinkorswim candlestick chart, there's some other things to point out. So definitely a big bear candle today. Not quite a bearish engulfing on SPX. Didn't close quite low enough, but we could call this a very powerful dark cloud cover. So that's certainly a bearish pattern. You can see we're definitely overbought in this oscillator, starting to curl down from that overbought condition. So plenty of room before you're anywhere near oversold, for instance. Now we haven't been oversold for a long time, so one step at a time. I'm not going to look at the weekly because the week just started. So yeah, definitely SPX, bearish reversal candle. Dow Jones Industrials, bearish reversal candle, looks like an inverted hammer. Or possibly a gravestone doji, although usually a gravestone doji you have a smaller real body, so I'd probably lean on this being more of a inverted hammer, bearish reversal. And you can see we've again found rejection here at the 200-day simple moving average on the Dow. So perhaps that's a more significant resistance, or it's serving up more significant resistance here on the Dow than the other indices. For instance, the 200 doesn't seem to be applying to those, at least at the current moment. So that's what I want to point out on the Dow, inverted hammer. Now on the Nasdaq, so the Nasdaq has just been relentlessly going up, even when the other two, for the last month or so have just been basically going sideways and not making new highs. The Nasdaq has still been making new highs. Well, today I think the Nasdaq's fever might have broken. We now have a very strong bearish reversal candle. In fact, it's a nice bearish engulfing candlestick, engulfing 3 prior candles, real bodies, close near the lows, very large body. This is the largest body candlestick we've seen for quite some time. So that could be a significant directional indicator. When you get a big body candle reversal like that, it could be pretty powerful. And the Nasdaq is absolutely overbought by any measure, including fundamentally, it's way overvalued, et cetera, et cetera. Not that that is a trading, or timing tool, but just worth mentioning. Now we actually do have a technical reversal. Let's see if it gets some follow through. I mean, if the Nasdaq actually starts showing weakness, I'd say the rest of the market can fall pretty easily, because even with the Nasdaq's outrageous strength that it's been in, the rest of the market really hasn't been that strong. It's just been basically going sideways, since early June. So if the Nasdaq really has a pullback, I think the rest of the market, like for instance SPX and the Dow, can easily get below their June lows. But we'll see how this plays out. Okay, so yeah, definitely want to point out bearish engulfing on the Nasdaq. That's what I want to do. VIX, VIX definitely kind of building a base here off its 200-day simple moving average. It's just kind of chopping around, but it's not breaking down. And more importantly than just the absolute VIX itself here, on the VIX VVIX tool. So I was pointing out the potential VIX VVIX divergence yesterday, although I said it wasn't very important unless you actually got the next steps where you get above the red moving average on VVIX, below the blue on SPX. Well, that literally happened today. I wasn't expecting that, but here we are. So we got the VIX VVIX divergence. That held nicely. VVIX made lower lows. VIX made higher lows. Now VVIX shot up well above its red moving average. Obviously VIX is popping as well. And SPX got below and closed below its blue moving average. And you can see I just have this horizontal line showing that prior high. So basically pretty much a double top there by 2 points. And now a sell signal here on the VIX VVIX tool. So just to summarize, we got candlestick sell signals. The Elliott pattern can certainly be interpreted to suggest a wave down has started. And now we have a sell signal here confirmed on the VIX VVIX tool. So yeah, things potentially could get bearish. I got tricked out today. I tried to go long some futures. It was looking good initially, and then we had this big rejection. So then I got stopped out of those. And now I've actually sold some futures short. Obviously my stop is above today's high. So on ES today's high was 32.26.25. So my stop is 32.26.5, just a quarter point above that. So again, could this somehow just been a one-day blip and we just shoot up again and start trending to the upside? Possible. Obviously, that's why the stop is in place, because you never truly know. But I think right now, given everything that happened here, it looks like a false breakout, double top, and now a sell signal. So yeah, maybe we will actually finally get this C wave down into the some of these lower targets that I've been discussing for a while, the 2800s. 2900s kind of area, maybe even 2700s if it's aggressive. But yeah, given the change since yesterday's video, I felt it worth updating. So do what you will with that. Again, I'm not super high confidence here because this market has just been full of fake outs and surprises, although today definitely gets my attention. It should have broken out and it didn't. It immediately rejected and had a big sell signal. So see what the rest of the week brings. If it actually gets trending down, it might not take too long, for the C wave to play out. If we look at this prior A wave, so from the high we had 1, 2, 3, 4. So in 5 trading days, this A wave did its thing. So if that's going to kind of be the same kind of speed, I mean, we could see a large portion of the C wave down, just this week, since today is only Monday. But we'll have to see how it plays out. Serial Trader signing off.